Hey everybody, welcome to another episode of Investing in Motion. This is where I'm pretty much getting my car and I'm driving from points A to B and talking about unfiltered what I'm thinking about in terms of investing, in terms of investments, what I'm thinking about in terms of the markets. My name is Amin Reina. I'm an investment coach and founder of Sage Investors. And I'm just leaving, just visiting my father, and I'm on my way back home. So I thought I'd just press the record button and share a few thoughts and what I'm kind of feeling about what's going on in the markets right now. And the key thing I'm feeling right now is cringe. I've talked about this quite a bit in other podcasts, other videos. I've talked about this with my students. And I said we're now kind of entering an age of cringe investing where everything is basically awesome. But yet, when you look at the fundamentals of what's going on, it doesn't feel so awesome. And that's kind of where I'm feeling right now. And I think a lot of people working with are kind of feeling right now because everything is awesome. The markets are doing fantastic. Like every day we're hitting a new record high. Pick an index. They're all doing great. And drilling it down to me personally, everything's pretty awesome right now. My portfolios are doing pretty good. Right now, I'm up almost 6% in aggregate over the year. I just looked at on a daily basis. If I look at the trades, every day so far this year, I'm 110 up, 110 days up, and 70 days down, which is almost like 60%. So 60% of the days in the markets this year have been positive days for my portfolios. And it's been pretty much up and down, pretty good, pretty solid. And there's really not, I'm pretty happy obviously I'm happy about that, but at the same time, I'm feeling kind of cringe because when I look at the fundamentals of what's going on in the markets, and fundamentally what's going on in the economy, and regular listeners know what I'm talking about, with all the trash talking and tariffs and trolling and government taking over companies or buying shares in companies and telling companies what to do and how to execute their business plan. We're seeing a lot of things right now that are not conducive to ultimately leading to healthy and vibrant stock markets. But here we are. And so despite everything that's going around and everything that's basically flashing red, in my eyes, from an investment perspective, stonks just keep going up. And I think that's the question we're all asking ourselves. And so why do you think that's happening? Well, part of it is just Wall Street is just, investors are just dialing it out. They just don't buy any of this, all this tariff stuff, not buying it. Inflation, not buying it. Unemployment's weak. Or unemployment's high. Transitory, temporary. This too shall pass. That seems to be just the general vibe. That's just a general, sentiment right now. And right now, it's there. It's working. But I also believe very much in the concept of slowly and then suddenly. You got a U.S. dollar has been depreciating. Gold is taking off. Crypto is taking off. What's going on? And so that's the part I'm trying to navigate here is how do I navigate through this? My portfolios are doing well. My positions have been pretty good. But I just don't feel, I guess, the vibe for it, but I keep holding on. And I think what comes down to me right now is it's just really about me just following a playbook and making sure I stick to these core investing principles. Like right now, there's a lot of things that are happening right now that are not good, but they're not playing out right now. But at some point, they are going to play out. But I don't know if I want to be around holding the bag. And so I'm really feeling right now when I'm talking to people, it's really all about what your investing playbook is. What's your ideology and how you're executing. And right now, this week, I made decisions to get out of holding, for my liquid portion of my portfolios, getting out of holding those high interest saving account ETFs, which were a year and a half ago paying 4.5%, but are now paying 2.4, and are probably going to start paying less if interest rates indeed do start going down. I've been pivoting away from that and more into holding like preferred shares, which given me a much higher yield and then potentially some small capital upside at a lower risk profile. That's where I've evolved to. But then I've also been looking at when certain positions that I have achieve the return that I'm seeking, I'm selling them. I'm not really trying to debate whether I should hold on to them. I'm just selling them right now. I'd rather just bank the profit than just, FAFO. So I own, and case in point, this week, I sold my positions in my Canadian equity positions, specifically the broad market positions sold in the VCN. I sold those off for about a 20% gain. And I just did it. And normally I would kind of think about, I want to hold on to it for a little bit more. But given right now the climate, and again, because of this cringe factor that I'm feeling, that the fundamentals just aren't justifying any of these valuations, I prefer to just bank the profit. And so that's kind of how I'm coping with the cringe, which is just really staying tight to the playbook. And if positions don't work out, get out. If positions are working and are getting the return that I'm looking for, take the profit, move on, play another day. And that's kind of where I am right now. And it's just this isn't like some little temporary thing. I think this is a situation now we're in that's going to be around for a fair bit of time, because we are seeing seismic changes in how underlying commerce is being done. I've talked about it, sorry, again, broken record. And it really relates to U.S. views of business, the American transformation from full-on capitalism, free market, free trade, open competition, fair competition, to full-on, straight-on socialism, communism, Taliban, whatever you want to call it, authoritarianism, whatever you want to call it, style of governance. And from the movies we've seen in the past, when countries and economies and businesses have to operate under that type of situation, it doesn't go well. And of course, with the US being the dominant economy, there is trickle-down effects. And the situation right now is just, we hope the trickle-downs, when it gets to the other countries, and the countries I'm in, or, that side of it, that trickle is going to be, a drizzle. But it's something like a lot of us, I've been kind of talking about it, but more and more people are bringing it up to me, that they're not settled into what's going on. I was looking at putting together the newsletter for my students that I send out every week in terms of sentiment indicators, and the AAI, the American Association of Individual Investors, in their weekly sentiment survey, it's overwhelmingly bearish, well above their historical averages. The CNN fear and greed indicator I always check in on is at neutral. And meanwhile, the markets are like posting record highs every day. So it's a very uncomfortable bull market that we're in right now. And it's very cringe. It's cringe. It's the best way I can explain this. So I'm grateful and appreciative for the healthy performance my portfolios have been delivering this year, considering everything that's gone on. But it's just, I got to keep your spider sense, my spidey sense. I'm just got to keep your eyes wide open and not get too like, oh yeah, and kind of get caught into this false sense of security, because that's what I'm feeling right now. And so every day it's just trying to cope with this really bizarro dynamic. And at some point, I don't know, maybe it gets normalized, but right now it's very weird, it's very cringe. And I'm wondering, is anybody else, as I said, I work with people that are telling me this and feeling like this, who are very experienced investors, who've been doing this for a while. They're not feeling great about it. They're happy with their portfolios, but they're not feeling great about kind of how this is all evolving. And I'm sure there's more people out there feeling the same way. So I'm just kind of like putting it out there that, yeah, you're not alone. You're not alone in feeling cringe about what's going on in the markets right now. But I think it's critical to have whatever plan or playbook that you've got, that you're really hugging that playbook pretty strongly and you're really following that playbook, whatever your strategy, whatever your ideology is. Whatever you believe, that you're staying true to it and not kind of like tinkering it or tweaking it. Because that's where things can get off the rails pretty fast. From a return perspective and from a cost perspective. So be careful out there, folks. Just be careful out there. The markets are doing great, but the underlying, what's under the hood, is not looking so great. Just be careful, folks. If you like this, that's all I got for you today. I'm almost home, so that's pretty much why I've almost got everything for you today. If you want to follow more of my takes, you can find me on sageinvestors.ca. You can find me through the socials, on Blue Sky, on LinkedIn, on Threads. I'm not on X anymore. That's just the nut bar scene right now. I got off that thing. Do a search for Sage Investors. That's where you'll find my takes. For those who are interested in learning more about investing, you can sign up for my courses that are on my website, sageinvestors.ca. I've got a nice little setup in that I have a kind of on-demand setup for a monthly fee. Just sign up and embrace the platform. All good. So thanks for listening in. Thanks for watching in. It's been another episode of Investing in Motion. No road rage today. Everybody's behaving. I think the last episode, I got cut off by a TTC bus. Everybody's being good. Maybe it's Friday. It's the weekend. Everybody just wants to get home. That's what I'm going to do. So thanks for listening in. Thanks for watching in. My name is Amin Rain again from Sage Investors. We'll catch you again another time. Take care. Bye.